An estimated 149 million Americans, or 62% of smartphone users, use peer-to-peer payment services. That is up from 90 million individuals in 2019. Many payment services like PayPal, which owns Venmo, and Block, which owns the Cash App, are booming in 2020 as more people start sending cash digitally. And then there's Zelle, which launched in 2017 and is owned by 7 major banks. It stands apart from rivals in a single significant manner. It doesn't have an independent income stream. However, clients utilizing any P2P service are vulnerable to being scammed. So why do the banks make Zelle? And how can fraud be stopped on the platform? Welcome to Bulls and Bears. If you're new to the channel, hit the like button and subscribe if you enjoy our content. Now let's go back to the video. Zelle was launched in early 2017, owned and operated by Early Warning Services LLC. That organization is co-owned by 7 significant banks: Bank of America, Truist, Capital One, JP Morgan Chase, PNC Bank, US Bank, and Wells Fargo. Over 1,800 banks and credit unions are joining the Zelle network. One of the CNBC analysts said that the purpose of Zelle is to create the ease of money transmission that Cash App, PayPal, and Venmo have, but doing it in a contained ecosystem within their network of banks. Projections suggest that Zelle beat Venmo, PayPal, and Cash App in transaction value in 2022. The thing about Zelle is the banks don't require it to be profitable. According to a CNBC analyst, people should, quote, think of this really as a little bit of an accommodation, but also as an engagement tool versus a revenue-generating machine. A few banks attempted to compete with PayPal back in the early 2000s. However, they eventually had to shut down. One of their significant flaws was attempting to monetize their services when PayPal was not only free, but also paying individuals to join and refer friends. The other thing that prompted the banks to pull out of P2P payments was the high rate of fraudulent activity. The CNBC analyst stated that the financial institution's tolerance for something like this is pretty low, whereas financial technology might be more willing to incur losses and learn as they go. Venmo was established in 2009. It was bought by PayPal in 2013 and grew in popularity a couple of years later. Additionally, Cash App was launched in 2013. In this vein, a CNBC analyst mentioned, for banks, it's a no-brainer to compete in that space. Customers use their mobile banking apps all the time, and no one wants to see the opportunity from a space that people are already really active in to third-party competitors. So that's where Zelle kind of came into the picture. Venmo and Zelle have some differences. They might look like they're both an account-to-account fintech challenger, but Venmo monetizes its consumer base, which Zelle does not do. Venmo also has a lower average transaction value than Zelle, which makes it interesting because according to a CNBC analyst, it's a space where providers can compete for volume, but they can compete for different kinds of volume, and you can get users who are on another platform to use yours, even if they don't give up the one that they were using before. Tight security can conflict with convenience, and that also applies to P2P payment applications. Of the 7 banks that own Zelle, 4 of them revealed more than $90 million in scam or fraud claims in 2020. That number increased to almost $236 million in 2021. An October 22 Senate report projects it will surpass $255 million in 2022. The report also expresses that in most cases, the banks are not reimbursing clients who were the victims of fraud or scams. Senator Warren has blamed the consortium of banks that own Zelle for withholding data about these scams and fraud cases. Zelle's parent organization, Early Warning Services LLC, referred to the report as misleading in an October 22 public statement. Zelle says that over 99.9% of payments are sent without any report of fraud or scams. There have also been reports of fraudulent activity on PayPal, Venmo, and the Cash App. Every one of the 4 organizations gives resources to consumers to better safeguard themselves. One CNBC analyst claims that fraud happens usually due to human error, and that people are being tricked online due to social engineering and scams. Companies right now are working hard to fix the fraud problem, and there are a lot of suggestions on how to do it. A CNBC analyst said, quote, "They are working to fix the fraud problem, and there's really three approaches they're taking to that. The first is a tech-driven approach. They basically use AI machine learning to better make sure that senders and recipients are who they say they are on the back end. There are also education campaigns. When you're sending money, you might get a prompt saying, 'Are you sure you're sending this to who you think you're sending this to?' Just to try to preempt the fraud before it happens by making consumers more aware that it's a risk. And then, the third is this rumored reimbursement plan that came out late last year. Under this plan, banks would determine if a fraud claim was legitimate, and then the bank that holds the account where the funds were sent would reimburse the victim. Competition in this space is really fierce, but it's complicated because it's really common for people to use multiple apps for different use cases. So I would say that the majority of P2P users are on more than one of these platforms, and potentially even all four of them, but they are using them in different ways. Organizations are competing to acquire more users in various age demographics. Just 20% of individuals beyond 65 years old said they use Zelle, while 41% said they use PayPal, as per a Pew Research Center survey from July 2022. According to a CNBC analyst, Zelle is looking to target the older generation that has higher financial means to adopt financial technologies as their main mode of getting a hold of financial services. Another analyst from CNBC stated that financial tech companies are also looking at the Gen Z and Gen Alpha populations because they use their smartphones all the time. So what do you think? Why did the big banks develop the Zelle app? Do you think it enhances or decreases the value of these financial institutions with the Zelle app in place? Let me know in the comments below. If you enjoyed this video, hit the subscribe button, click on the notification bell to be updated on our new content, and don't forget to give us a like if you want more videos similar to this one. See you next time!